How credit works and why banks don't want you to know. What if I told you that the credit system you use every single day was engineered not to make your life easier, but to make banks richer? Today, I'm exposing how credit actually works, why it's far more powerful than most people think, and why banks prefer that you never learn the truth. Welcome back to Make Money with Panda. Today we're diving deep into the financial tool that shapes your life more than you realize, credit. Credit affects whether you can buy a home, get a car, start a business, travel, or even secure certain jobs. Yet almost nobody understands how it truly works. And that's not an accident. Banks spend millions marketing credit cards, loans, and special offers, but they rarely explain how these products actually create profit for them and long-term cost for you. Let's break it all down, clearly, simply, and honestly. What credit really is, not what you were told. Most people think credit is money the bank already has. But in reality, banks create new money when they issue loans. When you borrow $10,000, the bank doesn't pull it from a vault, it types the number into your account, and that new balance becomes spendable money. Your debt becomes their asset. Your future payments become their guaranteed income. This system is incredibly profitable, which is why banks want as many borrowers as possible. Why banks push credit so aggressively? 1. Interest is a lifelong revenue stream. A 30-year mortgage can generate tens or even hundreds of thousands in interest. Credit cards. Even more, especially if you only pay the minimum. 2. Borrowers are predictable. Banks don't fear your debt, they count on it. As long as you keep paying, you become a stable income source. 3. Fees create extra profit: late fees, overdraft fees, annual fees. Some banks earn billions per year on penalties alone. 4. Loans become investments for the bank. Your mortgage can be packaged, sold, resold, insured, and traded. Banks profit multiple times from a single debt. 5. The system ensures demand never stops. Why? Because salaries often grow slower than living costs, especially housing and education. Credit fills the gap, and banks monetize that gap. Credit scores, the hidden incentive system. Credit scores are marketed as a measure of financial responsibility. But here's the truth, the system rewards borrowing, not saving. You can have $200,000 cash but a low credit score if you've never taken loans. Paying off debt too early can actually lower your score. Using no credit at all can hurt your score even if you're wealthy. Credit scores don't measure your financial health, they measure how well you fit into the credit system. The goal: encourage borrowing, discourage independence. Why banks prefer you don't know this? If everyone understood how credit works, people would borrow smarter. They'd avoid high-interest traps. They'd pay off debt aggressively. They'd negotiate better loan terms. They'd invest earlier instead of living on credit. Education threatens profit. The less you know, the more you rely on banks. The more confused you are, the easier it is to accept bad terms, unnecessary fees, and long repayment periods. The ideal customer for a bank is not someone rich or poor, it's someone who borrows consistently and pays forever. The hidden costs of credit. Credit isn't just expensive financially, it's expensive mentally and emotionally. Here's what long-term debt silently causes: stress and anxiety, limited career decisions, delayed life milestones, reduced investment opportunities, lower savings, a permanent sense of catching up. Debt changes how you think, plan, and behave. That's why understanding it is so powerful, it lets you take back control. The part banks hope you never understand. Here's the final truth: banks don't want you debt-free. They want you manageable, not struggling, not thriving. Just stable enough to keep paying. Financial education disrupts this model. Once you understand how credit works, you start to use credit strategically, borrow only when it benefits you, avoid predatory products, build wealth instead of paying interest, increase your financial independence, and that's something banks would prefer not to encourage. Summary. Here's what you learned today: credit is money created by banks, not money they already have. Debt fuels the banking system. Interest and fees make credit deeply profitable. Credit scores reward behavior that benefits banks. Financial literacy threatens this business model. The more you understand, the less vulnerable you are, and the stronger your financial future becomes. If this video opened your eyes, make sure to hit like, subscribe, and turn on notifications. Comment below, has your view of credit changed? Do you think the system is fair, or is it designed to keep people in debt? Thanks for watching Make Money with Panda. Stay smart, stay informed, and I'll see you in the next one.